Welcome back to Trader UK, Adam here. As promised, today we're going to take another look at Ocado. This is a company who released their 2020 earnings report recently. It's also a company who make up the third largest weight within my portfolio, so I'm very bullish on this company and I've been doubling down on it recently, but its continued success is very important to my portfolio. I think the pandemic has impacted this company twofold. Firstly, on the retail side of the business, they've had a great boost from the changing shopping habits, and then on the technology side, they've actually been held back by travel restrictions. They can't get out there and travel and forge those new relationships like they normally would. So we'll see how that impacts my outlook, but I am still very bullish on Ocado. Like I said, I think over the next 2 to 3 years, I expect them to at least double in value, and over the next decade, I think this is a 5x opportunity. Before we go any further, before we get into it today, if I can ask you, smash the like button for me, it really helps out with the channel, and of course you can subscribe for more investing, more tax and more general money talk. Ocado is a UK-based company. This is their website, or one of them that you can see here on screen. It's probably best known as a 100% online grocer, and they adopt a lot of automation and robotics within their process. What you may not know though is that there are actually two parts to this business. Firstly, Ocado Retail that you can see here on screen. Very simple process. They have the website, you can place your order here or via the app. They do have an app as well, and they deliver groceries to your home. There are no physical Ocado stores. They are a pure online play, and they have been capturing market for the last 20 years or so since their inception, but more so recently, and certainly accelerated throughout the pandemic. Then you have their technology arm, the part of the business that I'm really interested in. Because they've spent 20 years perfecting their model and their technology, they are leaps and bounds ahead of their competition, and their competition are now trying to ramp up their own share of the online grocery market. So Ocado are able to sell their technology and their expertise to the competition, which is a great model, by the way. That usually comes in the form of partnering with more traditional supermarket chains, so that Ocado will build and deliver these big warehouses, working CFCs that you can see here, or customer fulfillment centers. The CFCs, the warehouses, are largely automated and they fill the online orders. This all runs on Ocado's own in-house software, which ensures maximum efficiency from picking the orders by the robots as quickly as possible to arranging delivery slots in the most efficient way. It is important though to know that this part of the business, the retail side, is actually a joint venture now with Marks and Spencer's, which means that Ocado only actually own half of this business now, and M&S own the other half. This is important because it means that depending on which part of the business you think delivers the value might determine where you invest your money. If you believe the technology arm of the business is actually overvalued, and it's this part, the retail side of the business, where the potential lies, then you might be better off investing in M&S, Marks and Spencer's, because they have a comparatively low or smaller market cap compared to the Ocado group. For me, I actually invest in both Ocado and M&S. I believe both companies will do very well moving forward. The full earnings for Ocado were released recently for the 2020 year, so I'm going to switch across and we'll take a look at those. If you haven't already, then you should take the time to check out the full webcast on their website, but I'm going to give you a brief overview of the numbers here and some of the key pieces of information that I managed to pull out of that presentation. And although the earnings for Ocado are always mixed, they always do a really good job of getting you excited about future projects. So we're going to take a look at that. So if you're not already bullish on Ocado, then see this video out and then see how you feel after that. So the headline figures here: retail revenue growth 35% up. Obviously, they've been a big beneficiary of the pandemic and the shift in people's shopping habits. 52% growth in fees invoiced to international solutions partners. That's actually the part of the business that I'm more interested in. It shows the most potential, so we're going to look at that in some more detail. 73 million EBITDA and 2.1 billion in funding. So a healthy amount of cash, but needed because this is a really capital intensive business model. Let's go and take a look at the financial statements and dig a little bit deeper. Now, we won't go through every single page here, there's too much information, but we will touch on the financial summary. This is for the group. We won't go into great detail on this, as we'll rather look at it by segment and go into more detail on each segment, but in general, it looks pretty good. Group revenue up to 2.3 billion, EBITDA increasing 68%, depreciation, amortization, impairment up 24% as well. That's a figure, because this is a really capital intensive business and they invest so much in these warehouses. That figure's only going in one direction, unfortunately, so expect that to increase year on year. Same with financing costs, because they spend so much money on these assets, you would expect to increase year after year. The loss before tax, let me just highlight this line here. If you're looking for a bottom line figure, you're better off using this figure here. And you can see the loss has actually increased, to the annoyance of a lot of investors. You could use the bottom line loss before tax post exceptionals, but they had a fire at one of their warehouses a couple of years ago and they've had to write off that asset. And then I believe the 104 million there is the insurance payout. So probably better to use that line that I've highlighted. But like you can see, the loss before tax is still increasing for this company. Let's take a look by segment. It'll be a little bit easier. Retail, first of all, which I've highlighted. So retail revenue up to 2.18 billion now, 35% up on the prior year. Of course, there has been an impact from the pandemic, a shift in shopping patterns and increased demand for Ocado. But it's important to point out, this is not a pandemic play. The company is actually being treated as if it is. It's about 30% off of all-time highs at the moment, which I think is a great point to buy in at. And it's kind of being lumped in with your Pelotons and your Zooms. People are expecting demand to really drop off a cliff as life kind of resumes and gets back to normal post-pandemic. The thing with Ocado is their model is different. If you compare them to a traditional bricks and mortar supermarket chain, it's very easy for a bricks and mortar model to increase capacity. During the pandemic, demand probably doubled for supermarket chains and grocery retail businesses. And bricks and mortar is quite easy to accommodate that increase in demand. You need more people on the tills and you need more people delivering to the warehouses and then taking the product out and filling the shelves. But that's a case of paying more overtime and taking on more employees. It's not that difficult. With Ocado's model, their entire model is based on warehouses that run at really high efficiency, really efficient already. So they can't turn around with a doubling of demand and say to their robots, we need you to work faster and harder. They're already doing that. The only way really to seize that demand for Ocado is to build more warehouses, which obviously takes a lot of capital and takes a lot more time. So this 35% increase that you can see here, that is a nibble on the demand, a little nibble. And at one point, I think it was July, Ocado had a waiting list of 1 million people to join their platform. Bearing in mind this company serves about 800,000 customers, or did at that time. So there is plenty of demand there for Ocado, and there will continue to be plenty of demand post-pandemic. So I think on the retail side, we'll continue to see double-digit growth moving forward with ease. What is really important to notice though is that this 35% increase in retail revenue has actually resulted in a 265% increase in EBITDA. So it's like a compounding effect. And that's because if you can squeeze a few percent out over here as a result of new software or updates or programming, increased efficiencies, there isn't much cost involved in that. So that translates to double-digit growth, for example, over here in EBITDA, which is great to see. So eventually that's going to result in this being a really profitable business model. Essentially, it's like economies of scale, but because it's all automated and digital and software based, it's economies of scale on steroids. UK Solutions and Logistics, 13.6% up for the year. This is them partnering with a UK retailer. Previously it was Waitrose, but they changed across at the end of the year to join up and partner with Marks and Spencer's. a bit of a transitionary year here. Essentially, when you go into the platform on the website or via the app, you can order Ocado own brand products, or you can order Marks and Spencer's branded products now. Ocado will then fill any orders you make for those products and send them out from their warehouses in their vans. They then send an invoice for a percentage of that sale to Marks and Spencer's, and they recharge some of the involved costs to them. That's what we're seeing here. So for me, I would always expect to see this increasing, providing the Marks and Spencer's brand is doing well, then you expect this to increase along with retail. You can see that EBITDA dropped from 72 million down to 44 million. I'm not reading too much into this at the moment. It's a transitionary year between retailers, but hopefully moving forward, we're going to get some better data coming out of here as well. International solutions. This is a revenue source beginning to come online now. It's also where a lot of the potential for this company lies. So they recognized 16 million of revenue in 2020. They bought 2 CFCs online for some of their international retail partners during the year. Remember that figure though, 16 million, because we'll need that in a minute. This part of the business is basically them partnering with grocery retailers around the world in more developed nations where labor costs are higher, so their automation has a bigger impact on the process. It's building out their automated warehouse and then running their operation using the Ocado Smart platform, which is basically the software that ties it all together. They typically partner with retailers around the world that have good market share, but who have typically adopted a bricks and mortar model. That allows Ocado to really help the retailers to grow their online channels, with a view that the more they grow, the more we grow. And if you take a minute to think about that model that Ocado have, we often see grocery retailers around the world try to expand internationally and fail. We saw it with Tesco's in the UK. The UK's biggest grocery retailer tried to expand into China, and I think they gave up that part of the business in the end and sold it off. We saw it with Walmart, who tried to expand into the UK under the Asda brand. I think they did okay, but it didn't live up to expectations. And again, they ended up selling off that part of their business last year it was. With Ocado's model, it's only the technology that is crossing borders. And I think that's going to allow Ocado to really have successful operations all around the world, because a robot picks groceries the same way in the UK as it does in the US, the same way in the US as it does in China. So that will allow them to really expand internationally. Let's move on, because I want to look in more detail at the international solutions part of the business. So we'll take a look at this slide here. We've already seen the revenue increase from 500,000 to 16.6 million in the 2020 year. We've already seen the EBITDA, the loss, increased. What we didn't see was this line here, fees invoiced. And this is important. Fees invoiced up 52% in the year, from 81 million to 123 million. It also says revenue is building following the go live of CFCs in France and in Canada, and that cumulative unrecognized invoiced fees totals £256 million. This is important to note here. You can see there's a big difference between what's being invoiced to the clients and what's actually being recognized as income. And this is going to be something to do with the accounting standards that they use. Most likely what happens is, in France and in Canada, when they build out these CFCs, the retailers will have to make an upfront payment. Maybe it's 100 million towards the cost of building out those warehouses. But the accounting standard, IFRS 15, a boring accounting standard, won't allow Ocado to recognize that income until later in the contract. Okay, so at the moment you're seeing a difference there, and we can see that's resulted in £256 million not yet being recognised in the accounts, but it has been invoiced. It might have even been received from the client. So what you're going to see is, in the early days of these international solutions, you're going to see revenue actually recognized a lot slower than it's being invoiced to the clients. And then in the latter days, in the latter stages, at a better level of maturity for this project, you're going to see revenue exceeding what's being invoiced to the client. So it's more of a timing issue than anything, but it's certainly something to be aware of. Let's move on and take a look at their outlook for 2021. This is interesting. So it says retail is going to be highly dependent on COVID restrictions. They're going to have new capacity over the course of the year from 3 new UK CFCs. Bristol, which is open in the first quarter, I think it's open already actually. Then Andover and Purfleet to open in the final quarter of the year. So they're not going to see the full impact of those until the 2022 year. In terms of the COVID restrictions, like I said, there's no shortage of people that want to join the platform, but what we might see is a reduction in the overall spend of your average client, the basket size they call it. That may decrease slightly, but with people working from home more, people will still go out less, unfortunately, this year. I don't think it's going to be as drastic as what they're expecting. UK Solutions and Logistics showing double-digit growth in 2021. Again, I would expect that. I think double-digit growth both for retail and both for UK Solutions as the Marks and Spencer's range takes full rollout on the platform. It says here, international solutions fees are expected to increase to around £50 million. 2 CFCs opened in financial year 20 for Casino and Sobeys will show full year revenue, and then partial year operations for 2 new Kroger sites that they're opening in the first half of 2021 in the US. It also says international solutions fees invoiced around 30% growth. So this 50 million figure here, this most likely relates to fees invoiced to retail partners for product that is moving through the CFCs that they've opened, whereas the 30% growth relates to fees invoiced to the client. So again, this might include those upfront fees that they charge to the retail partners when they are building out the new CFCs. If I scroll down as well, you can see here, international solutions expected to be lower as investment more than offsets increase in revenue. Investors didn't like this one. It sold off about 5%, and I suspect that is going to be the reason there. Basically, they're saying, yes, revenue is going to be increasing, but we're spending more money, so it's going to be offset anyway. They do say that they're spending 700 million on capital investment, 40% on UK CFCs, 40% on international CFCs, and 20% on development and other. So you can see that even split there. You can see how important the international solutions are going to be for this business moving forward. Now, the fact that investment is outweighing revenue is not a problem for me. I expect that. When you spend 700 million building out these CFCs, these warehouses, unfortunately, not all of that can be capitalized. Some of those expenses have to run through the income statement, and that's what's going to happen here. That's why we're seeing investment outweighing the increase in revenue. But at this stage of the business, at this stage of the life cycle, that is not a problem for me. I've just skipped a few slides because I find this one really interesting. You can see here 7 partners going live in 2021. So Ocado is obviously their own platform in the UK and their partnership with M&S. Morrison's is another UK-based retailer. I think this is a different setup with these guys. It's an old agreement that they had. Morrison's are not exclusive with Ocado, so they can sell via Amazon. They're partnered with Amazon actually, and Deliveroo, these types of platforms. Bon Prix, I believe, is Spanish. Casino in France, Sobeys in Canada, Kroger's in the US, ICA Gruppen in Sweden. So you can see they've got some good exposure worldwide now. They also mentioned down here Coles out of Australia and Aeon in Japan, who go live by 2023. What's interesting is they usually have one sort of exclusive agreement. Sobeys, for example, in Canada, the Ocado's platform will only be used by Sobeys. But what's interesting is that it's on the basis that Sobeys are expanding their online reach. So if Sobeys did turn around and say, do you know what, we're happy with 2 CFCs, we're going to move back and concentrate on our bricks and mortar model, then that frees up Ocado to look at other retailers within the same country. So it's good because it means that Ocado aren't necessarily tied into one retailer, but if they do have one retailer who is really pushing forward and growing their online channels, then they will focus on them and they will help them to grow. They are expecting as well to have 10 times as many CFCs online worldwide as they did in 2020. Now that means that they'll have more than 20 live sites by 2022 around the world, and that's not a ballpark figure either. You can see below that they already have 17 CFC sites currently under construction, so just by finishing that construction work we'll see them hit that target, and that's not to mention any projects that they might take on in the next 6 months or so. The offer of CFCs that they manufacture or they build is also expanding. Traditionally, they focused on the large format warehouses. Now you can see they're looking at these mini CFCs, which are more suited to less densely populated area, more remote areas. And in London as well, they've been trialling Ocado Zoom, which is their micro fulfillment. You can see here, they call this the convenience store of online groceries, and they see it as a huge potential or huge opportunity. Essentially, these centres will carry fewer products and they'll carry more meal deals and bottles of wine, more convenience goods really, but they'll deliver around London within an hour. So Ocado are currently using third parties to make the deliveries. I imagine a Deliveroo type service, but you can see this is something that they're ramping up as well. They're looking at new sites in London and they're expanding to other cities at the moment as well. And that's quite typical of the Ocado model really. What they do is they trial it in the UK, they perfect it in the UK, and then they sell that process overseas to their retail partners. ISF here is in-store fulfillment. So as well as Ocado building out these CFCs, these warehouses, which takes a lot of time, in the meantime, the retailers can use the Ocado Smart Platform, the software, to operate a click and collect service, which many of them are doing. They expect to be in over 1,000 stores globally by the end of 2021, which is very significant. Let's move on to the next slide. We'll skip one. This chart here. This chart is really interesting. So you can see the grey bar. This is a typical CFC, like what they build out for their partners overseas. And a typical CFC can fill 65,000 orders per week. The blue chart shows their Erith CFC in the UK, which was a typical CFC, but they've increased the capacity through efficiencies and they've managed to double the orders per week that can run through that CFC, which is very impressive. If you think about Ocado's model, they're paid a percentage fee based on how much product they move through those CFCs for their retail partners. So they have two options. They can either build out more and more CFCs to increase revenue, or they can increase the efficiency of the CFCs that they already run. By doing that, of course, it's much higher margin because there's no build cost involved, but really interesting to see and really positive. Ocado also acquired 2 robotics companies in 2020 and they're already putting them to use. They point out that although their warehouses are on the most part automated, there's still a human element. You need people to load in the produce into the system, and normally once the robots have done the picking, humans end up doing a bit of the packing as well. They estimate that this costs a typical CFC £7 million per year. They believe that their robotic arms can remove that human element as well within 2 to 3 years, they say. That's something that would be sold as an add-on, so an additional source of income. And if we say at that point in 2 or 3 years' time that Ocado have 50 CFCs operational, 50, and they can split that cost saving with the retailers, then that would be an additional 175 million in revenue. If we're bullish and we say that maybe they have 100 CFCs operational at that point, that would be 350 million per year in revenue. And remember, it would most likely be a recurring yearly fee for that. So it's going to be very high revenue. And then finally, this slide I found interesting about the potential market size. So very quickly, what they're saying here is that the global grocery market is worth £7.6 trillion. The key markets are worth 2.8 trillion. Ocado say key markets are normally your developed economies where the cost of labour is higher. So lots of Europe, North America, and then parts of Asia as well. Also Australia, New Zealand, those types of nations. The blue circle is Ocado saying that if our key partners can seize 25% market share, that would see them turning over 0.7 trillion or 700 billion. Now, the 25% market share, first of all, I would say that's a little bit ambitious. At the moment, through their 9 partners that they have, they estimate that they're about a quarter of the way there, so between 6 and 7% market share. But let's go on the basis that they are able to achieve that through a process of increasing the number of partners that they have. They've got plenty more markets that they can move into, but also helping their partners to increase their market share. They then go on to say that if 10% of those sales are put through the online platform, if 25% are put through the online platform, 50%, right the way up to 75%, then that will result in a fee opportunity for Ocado of between 3.5 billion on a 10% weighting and 26.3 billion on a 75% weighting. Now, we are probably at the moment close to that 10% weighting there in terms of the percentage of grocery sales that are made online, and we're moving towards, some estimates say we'll move towards 25% by 2025. Others contradict that, but we're certainly heading in that direction. So you can see how large this market is potentially for them. And that's not really taking into account the fact that eventually this full 7.6 trillion global grocery market becomes a key market over time as economies develop, as the increased cost of labour takes hold, autonomy becomes more appealing. So eventually this will all become part of that market and these figures will increase anyway, but certainly interesting to look at. It's also interesting to point out that Ocado are now seeing opportunities outside of the grocery market. They're now looking at the warehouse setting and they see that as a potential market using some of their subsidiaries of robotic picking arms as well. Overall then, the retail arm has been performing well, continued growth, and I think that will continue into the future as well. I suspect the retail side of the business will double its market share over the next 2 or 3 year period based on the waiting list of people trying to get onto that Ocado platform. Of course, it's lower margin for that side of the business, but by showing success in the UK market, that helps them with their international solutions. It's a selling point to be able to say, look how well we've done, look how much market we've seized in the UK. Don't you want that for your business model overseas? The international solutions now starting to ramp up revenue, and we're seeing that enter the exponential growth curve. 2 CFCs online at the end of 2020, 9 by the end of 2021, and possibly more than 20 by the end of 2022. Plus, they have the ability to double the capacity of a typical CFC. So really, it's the equivalent of 40 CFCs online by the end of 2022. Of course, that's going to be very capital intensive, but the more CFCs that we see coming online, the better the margin is going to be compared to the traditional retail model there. Ocado Zoom, something that looks very exciting and another big opportunity for the company. And then those acquisitions that they made, in particular, the robotics arms is creating more opportunity for Ocado moving forward. So I, for one, very excited about the next 2 or 3 years for this company, and I will actually add to my position anytime the share price drops below £20 per share. I think that's a good entry point. What are your thoughts on this one? Are you holding Ocado? Do you see potential in this one? Thank you very much for watching. Let me know your thoughts down in the comments, guys. I'll see you next time.